Hello and welcome to Charting the Markets with me, Sean Mearson, Senior Market Analyst at RG South Africa. Today's economic calendar, we do have that EU summit underway. It's all day today. And then we also have that core PCE inflation data out of the US, which will be one to watch as a measure of key measure for inflation for the Fed. And the Fed is set to meet next week, as are other central banks. We do have the Bank of England and the Bank of Japan meeting next week as well. Looking at some charts and starting off with the US dollar basket. Now, yesterday we did talk about this upside breakout. We had this reversal of support circled red. So that longer term trend for that dollar is towards strength at this stage. And then we had this strong green candle, which was just a short term breakout above resistance here. Hasn't seen much action since then, I think, but we're still sticking to our guns there. We have started to move in overbought territory. There's a bit of caution there. I think if you are long, you might consider having a stop loss and a close below that 105.70 mark. Whereas if you want to be a little bit more conservative, maybe below that that long green bodied candle lows, I think about 105.85 mark. But we are searching for a move towards that 107 mark. If we do start moving above that, we're looking at this overhead resistance here, possibly about 108.50. We take each level as it comes, and we are protecting ourselves with a relatively tight stop loss in an uncertain market environment. And of course, ahead of that inflation data later, which could cause the success or failure of these assumptions. Looking at cable, chart is quite interesting, is that we do have that longer term downtrend in place. So pound weakness relative to dollar strength. We had this reversal off that trend line resistance, and we have subsequently come off. But the price has actually stuttered on the move down. So we had a target at about 1.2040. But yesterday we see there's a long wick bottom candle. This could be considered a bit of a hammer type formation, suggesting an end of a short-term move down. This green candle also closes above the halfway mark of that preceding candle, suggesting it to be a bit of a harami, which is also a bit of a bullish reversal candle. Like I say, we want to wait into this afternoon's US inflation data, the PCE data, I think, for short-term direction. But the bias here is still to the downside. Still looking for short positions on cable as we assume that longer-term trend is down. So even if we do enter into a rebound, we wouldn't be looking at buying into that rebound, but rather waiting for that strength to play out and then looking for a bearish reversal, at least before that either trend line or this 1.2300 mark, sort of which marks pretty much a major high for new short entries. So we short-term move lower does appear to have ended. We do have data that's going to then catalyze a further short-term direction. In the event that we do get a bounce, we're waiting for that strength to play out in the pound relative to the dollar, and provided that we see a bearish reversal before that 1.23 mark, then we'd be just looking at re-entering short positions on cable. Now looking at the dollar yen, now we do have Fed meeting, we do have the Bank of Japan meeting next week as well. So a lot of news to guide this market or to influence direction over the next little bit. But how the technicals look right now is that we're in a long-term uptrend. So dollar strength relative to yen weakness, and we do have, so there's a bit of a grind higher, almost like a rising wedge type formation. We do have at the moment, not complete, we'll see how today plays out, but this red candle is engulfing that previous candle, which is a spinning top. That spinning top is suggesting a bit of indecision at these highs, and if this candle does engulf, close below the lower part of that body of that preceding candle, it suggests that it is a short-term top. And while we recognize that that longer-term trend is up, but maybe we could have a short-term correction of that trend. So a bit of a pullback. If we do get a pullback, we'll be waiting for that weakness to play out and then looking for a bullish reversal at one of those support levels for long entry. And in that scenario, we'd look at maybe having, if we do get it, that is, looking at having a stop loss below that reversal low, and then targeting a move back to test these highs at 150.70 odd, and if we get through that, this overhead resistance sits about 152 on the yen. So still keeping a long bias to trades on the yen, but recognizing that we could be starting off getting a bit of a short-term correction forming, or at least a short-term top. And just to add there, we do have these red lines on our charts there, where the price is making higher highs and the indicator is making lower highs. That is a form of negative divergence, so bearish divergence, which just further suggests that maybe we are getting a bit of a correction before that longer term uptrend is resumed. Moving over to some indices now, starting off with the US. Bit of a tricky one here as well. Not an easy phase of the market for sure. We are sitting in oversold territory. We did break this level of support at 4160 mark, which we talked about yesterday. But that breakout is not really the most convincing thing because we have this long lower wick to this candle, which could be a bit of a hammer type formation. And that would suggest an end of a short-term move lower. So we do technically have that downside breakout, but we have this long lower wick showing a bit of a price rejection at the lower levels. I think it might be worthwhile just seeing how today's price action happens, possibly into that US inflation data, or that PCE, core PCE data. If we do end up with it holding below this level, then we can assume that there is some downside momentum, and we do target the move to that 4065 mark. Then we can trail a stop loss on a close above a one-day low in that scenario. I think if you are a bull, you want to see this candle, today's candle, instead rally. You want to see it close strongly. You want to see it close above the top part of this body. You want to see it engulf that preceding candle, suggesting that we have actually found support a little bit lower than we expected. We're not breaking that level. We are reversing from oversold territory. And in that situation, we could look at the reversal low as a possible stop loss, suggestion about 4125, and then we would be targeting, I think initially probably 4266, or even above that if we get through that 4325 odd. Look at the EU stocks 50. Now, we do have short-term momentum is down on those EU stocks. We do see this price moving low. We have started to zigzag through that 200-day simple moving averages, but there is a major low that is still holding at this point in time. So the suggestion here is that we're in a broad sideways range-bound trading environment. We do have a tentative reversal here, which has lost a bit of momentum. So we are certainly watching this level. That level comes in about 3,970. It's a major low on EU stocks. We start breaking below that, and that could be a suggestion, or that this broad sideways trend is now moving into a longer term downtrend, which obviously changes our approach to trading in a sideways environment. We're looking at trading between levels. We're looking at longs and shorts off levels, breakouts of levels, or reversals off levels. If we start confirming a new longer term downtrend, then we'd look at shorting rallies and keeping a short bias to trades. Now, the FTSE 100 still looks very similar to what we saw when we looked at the chart yesterday. So it's conforming quite nicely to the levels. It's been quite a nice range trading environment for the FTSE 100. And obviously, recognizing your trading environment when you trade it is important. And like I say, we look at trading between levels or breakouts of levels. Now, we did technically have a downside breakout of that 7,400 level, Looking at the FTSE 100, the FTSE 100 has been conforming quite nicely to that range-bound trading environment over the last little bit. We did see that price breaking below that level of support at 7,410 mark. Now, since we had that breakout, the price has actually consolidated, and we've got this little box here. I think for short-term direction for traders, you want to look for either breakout in either direction to show some conviction in that directional move. The top of that range being 7,410, and the lower end of that range being about 7,330. So looking for a close below. Consider downside breakout, targeting a move back towards 7,200, in which case look at having a stop loss and a close above that 7,410 mark. Alternatively, if we break to the upside, we could look at having that stop loss on the lower end of that range, 7,330, while targeting a move higher. Now, 7,700 is that sort of longer term resistance target. It has proven to be resistance. We've seen the price falling off that a couple of times, but we could have probably a more conservative target sitting there at about 7,560 if you want to be a bit more conservative and have an initial target. And we could always look at trailing your stop loss if it does start moving in that direction. But short term, we're trading between levels. We're waiting for a breakout of this very, very small range which has formed on the FTSE 100. Now, looking at some commodities and looking at US crude. Now, US crude, that longer term trend is considered up. See the price above that 200-day simple moving average. Short term picture has become a little bit noisy. We had this gap higher following the onset of the war in the Middle East. And since then, we've had a bit of a pullback, but the price is definitely finding support around what was that gap away, which is gap support. And we call it gap support, and it's acting that way right now. When you see these long lower wicks on the candles there, that's showing a bit of price rejection there. So to me, this is still in line with that longer term uptrend. There is a bullish bias. I think we do have a bit of a bullish reversal, which has formed there. Hasn't really gotten the momentum, but the signal is there. And does target a move back up to about 88.70. Apologies, this level is incorrectly marked. 88.70 being that initial resistance target there on the way up. And then you can look at having a close below that gap below there, about 82.30. So 82.30 as a possible stop loss indication on the way up. Looking at gold. Gold has tended to, it really looks like it's trying to break this 1,985 resistance level. We're in a range-bound environment here, so we are happy to trade between levels. This very shallow pullback is also a bullish signal to me. So we had a very, very shallow pullback before we started seeing some gains confirmed. And we are technically trading $2 an ounce above that 1,985 level. But I'd like to see a little bit of a stronger move, a bit more momentum on the way up. Maybe get to about that 1,990 mark before we start considering 2,045 as that next upside resistance target. In that situation, close below one day low might be a consideration for a stop loss in that trading environment. Now, last but not least, look at Dr. Copper, or copper, considered a leading indicator of economic health. Another range-bound trading environment, which does seem to be evident across a lot of different markets at this point in time. But we do have a bit of a reversal that looks to be forming off support. And copper, probably not the most popular traded product, but it is relevant if you are looking at miners. So a lot of the miners that do copper, obviously a very, very important commodity. And a lot of its fate is determined by the health of the Chinese economy being the primary consumer of that commodity. So recent data has suggested that the economic, they could be recovering a little bit quicker than expected. That GDP figure coming in at 4.9%, with 4.4% was expected. So, and there's obviously been moves to stimulate that economy, and there's probably more of those coming. So, copper does look to be at a level. Looks like it's reversing off support. $8,200 per metric ton does seem to be the next upside target there. We get through there, possibly even 8,710. That's all the charts from me. Sean Murison, Senior Market Analyst at IG South Africa. Thank you very much for watching.